Welcome to the Techno Fundamental Report for December 29th. History has shown that one cannot legislate a culture of integrity, and yet one of the paramount responsibilities and challenges of corporate leadership is to ensure such a culture. In other words, there are a lot of people out there that don't have integrity. They're psychopathic. They have no conscience. Charles Ponzi of the Ponzi scheme. Bernie Madoff, which was, when we look at a company or looking at investment, we always want to look at the numbers. Well, with Madoff, there were no numbers. He wouldn't tell you anything. Enron, accounting scandal. You had to really look at the numbers. Now, you could have picked up on Enron by looking at the numbers. Then there's the latest situation here with FTX. Well, we got another criminal out there. And the thing that's happening here, it is what it is. I mean, we've got to realize that we have got to check the numbers ourselves. In fact, we have an acronym we use called SNAC, S-N-N-C, SNAC. It means story, numbers, and chart. We want to look at the story. It's got to make sense. The cryptocurrency thing just does not make any sense. I mean, it's a non-producing asset. There are no numbers to look at. However, there's billions of dollars going into this stuff, and it just really is mind-boggling. So let's just kind of take a look at the market. I'm going to kind of change our charts up a little bit. What I've got here is what I call a double chart. We've got the S&P 500 here at the top. You can see here this is the 200-day moving average. And you can see that we keep getting these bear market rallies in here, and they tend to fail. So as a result, we're still seeing the S&P is definitely in a downtrend. Now, the NASDAQ's even worse, and very important to understand the relationship of the NASDAQ to the market, because the NASDAQ is primarily made up of growth stocks. So if the growth stocks are having a difficult time, studies show, and I actually have a 50-year study that shows that when this happens, where the NASDAQ underperforms the S&P, the market just does not have a good year. It's just not a good time. Now, another double chart we have here is the aggression index on the top, and then I have a comparison of the NASDAQ to the S&P in the form of a ratio. So in other words, when the ratio is heading down, it's telling you that the NASDAQ is underperforming the consumer staples stocks, which are super defensive. This is now hitting a new low. I went back and looked in the past at other market bottoms, and I actually got readings as low as 90, and we're currently at 136.87. You can also see here that I have the 10-week moving average here for the NASDAQ compared to the S&P. Again, it made a new low as well. Not a good situation. On our three economic indicators, you can see here interest rates are starting to pick back up again a little bit. You'll notice here as we get through the report that the bond market is kind of taking it on the chin. Oil continues to be in a downtrend, getting somewhat of a bounce in here below that 200-day moving average. Financial stocks somewhat rolling over here, not positive. This indicator is an important indicator. It's telling us that the sellers are still in the house. We're getting way too many new lows on the New York Stock Exchange, which is not a positive reading. Now, also, I did want to mention the sentiment readings. Now, sentiment is a secondary indicator. We don't use it as a primary indicator. But I will note here that when you get below zero, it means that there are more bearish people than bullish people. In this survey that's done by the American Association of Individual Investors, we are now in the 39th week. Whereas if you go back and look at the COVID situation, that went 34 weeks. And then if you go back to the financial crisis, that was 15 weeks. So right now we are 39 weeks of extreme pessimism. So everybody's pessimistic. I get it. Everybody gets it. There's a lot of uncertainty. I did want to mention Apple real quick. We've been noticing that it has a pretty definite support level here at 135. The stock, you get the buyers coming in, then the sellers come in. And then, the selling dries up, the buyers come in, the selling dries up. But you can see here, we broke support in the last 2 weeks, really, last several weeks. And, it really was the last high ground that was holding up. So Apple is kind of a canary in the coal mine. It's telling you that things are in a downtrend. Here's the bond market. This is, the corporate bonds. We're seeing a break below the 50-day moving average. It never got really that much above the 200-day. So the bond market is not looking good at this time. Looks like interest rates may be heading up. Here's the government bond. This is the 20-year Treasury. You can see it's rolling over as well. You can see here also on the yield curve, we're seeing a little bit of an improvement in the yield curve. What will be interesting here is, and I think we should think about this, the yield curve is designed to predict recession, so it's inverted. And I'm just kind of questioning whether if it uninverts, what does that mean? Does that mean the end of the recession? We'll have to see. Let's just watch it. Now, I did want to mention one stock that's on our watch list. We're not buying this stock. We're just watching it. This is Halozyme. This is a biotech company, a very profitable biotech company. You know, with biotech, you got two types of situations. You got ones that make money, that have existing pharmaceuticals that are profitable, and then you have those that are just strictly in research and development, and they have to have a lot of cash from their, their equity offering or debt financing in order to get them through the R&D process. So you need to really be aware when you look at biotech. Is this company currently have revenues and earnings, or is it one of these R&D deals? Well, Halozyme, if you look here at the graph, you can see it's in a really nice uptrend. Now realize we just looked at the indexes and everything's in a downtrend. This stock is holding up reasonably well. Now if we look at the weekly graph, what we're looking for on the weekly graph is we're looking for stability. We're looking for when you see a real wide swing in price, that's not very stable. Whereas this is kind of quieted down and it's got a little base that's working. So continue to watch. Now on the numbers, let's take a quick look at the numbers. Profit margin, 36%, very profitable. Return on equity, now they've got a lot of debt, but the question, like we mentioned last week, debt is okay as long as the company's business can support it. Well, you can see here that they've got a return on equity of 111%, which is because of the debt. They're leveraging the balance sheet. Cash flow is good, and they've also got cash on the books of about $265 million. Now, they've got a good chunk of debt, but, if you realize that their revenues have jumped 80% over last year, maybe what happened here is they borrowed money in order to build a plant so that their revenues would jump 80%. We have to research that, but like I say, this is a watch situation. As far as other numbers on here that are interesting, the current ratio is about 6-to-1. Now understand current ratio. That means that the company has 6 times the amount of cash needed to pay their liabilities. So that's a pretty solid number. Anything over 2-to-1 is good. So basically what I'm saying is check the numbers, make sure that the stocks on your watch list are solid situations, because like I said at the beginning of the video, there's a lot of creepy people out there that'll lie to you, and you just need to kind of take care of yourself. Thank you very much.